Markets just turned red, and most people have no idea why. Today we saw grains and cattle close lower, and it wasn't random. Outside markets were moving. Tariff uncertainty is creeping back into the conversation, and when uncertainty rises, money moves fast. Let's break down exactly what happened. Early in the session, there was some stability. Traders were watching positioning, looking for direction. But as the day developed, pressure started building across the grain complex. Corn softened. Soybeans leaned lower. Wheat struggled to find momentum. Then cattle followed. This wasn't just about supply and demand. This was about confidence. When outside markets start flashing caution, equities wobbling, the dollar shifting, global trade talk heating up, agricultural markets feel it. Funds do not wait around. They reduce exposure first and ask questions later. And right now, tariff uncertainty is the elephant in the room. Whenever trade policy becomes unclear, export-driven commodities react. Grains depend heavily on global buyers. If traders even suspect disruptions, they price in risk immediately. That's what we saw today, risk premium coming out of the market. In cattle, the tone shifted lower as well. Lean hogs struggled. Live cattle saw pressure as traders weighed broader economic signals. When outside markets turn defensive, protein markets often follow. It becomes less about today's cash trade and more about forward expectations. Momentum also played a role. Once technical levels start breaking, algorithms accelerate the move. Stops get triggered. Volume picks up. What begins as light selling can quickly turn into a coordinated push lower. And that's exactly how sessions like this develop. Now, is this the start of something bigger? That's the question everyone is asking tonight. One red day does not make a trend. But when you combine tariff uncertainty, outside market volatility, and technical weakness, it creates an environment where traders become cautious very quickly. The key going forward will be headlines. If tariff discussions escalate, expect volatility to remain elevated. If clarity returns, we could see stabilization just as fast. Markets hate uncertainty more than bad news. Clear direction, even negative direction, allows pricing to adjust and confidence to rebuild. Watch export demand closely. Watch currency movement. Watch how funds position themselves over the next few sessions. Those will give early signals about whether today was simply profit-taking or the beginning of a broader shift. For now, grains closed lower. Cattle leaned lower. Outside markets influence the tone, and tariff uncertainty remains the underlying driver. Stay alert, manage risk, and be ready because in markets like this, sentiment can flip quickly. I'll continue monitoring developments and break down what matters most in the next update.